Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea on an odd Monday. There's no other way to put it. Odd for the news flow, odd for the immediacy of the news flow, which is through the weekend news, and then overnight, Tokyo opening, the Asian markets, news, Taiwan dollar explodes in strength, and beyond much more than that, just other news. So it's such a clumsy Monday. We demanded clarity. Thank you, Dana Telsey. Really appreciate her coming in on the state of retail in America. Very, very informative on how fluid and uncertain is the future for retail America. Ian Lyngen was in, without question, our Global Wall Street interview of the day. Ian Lyngen here on the bond market. He looks for the 10-year yield out there to move from the 4.30 level down to 3.6%. Let's listen.
I do think tariffs complicate the calculus for lower rates, but I do think that the Fed is ultimately going to start the process of normalization again, but not until we've got greater clarity on what the trade war really means. And I do think 10-year yields in this year at 365, implicitly because the president keeps changing the rules or changing the trade dynamics, it's very difficult to estimate what this all means for core PCE and therefore the Fed and the trajectory of the economy. I think the one clear takeaway is that there has been a concern raised about the dollar's status as a reserve currency and whether treasuries are still flight to quality assets. And the recent price action suggests that those two still hold for the time being, but that's going to be the major question for the next several months.
Ian Lyngen with us there from BMO Capital Markets. Sometime news comes out, you expect it, you've been waiting for it. That's the case with an Apple debt offering. I've been waiting for it about 9 months, 2 years since they did their last offering. It's a tranche of 4. At this taping, unknown what those levels will be, but I'm sure it'll be price up, yield lower, and very near a Treasury yield. We are so advantaged at Bloomberg Intelligence to have Robert Schiffman with us and his team looking at corporate paper. He published immediately on the known and the unknown of the Apple transaction. Here, Robert Schiffman of Bloomberg Intelligence.
It sort of goes back to my early days at math camp. You know, their weighted average cost of capital is dominated by their cost of equity, which is about 9.25%. And their weighted average cost of debt is effectively zero. When you have a $3 trillion equity market cap, the cost of debt is nothing. And that's why they keep $100-odd billion of debt on the books. So it makes math sense to borrow money and buy back more shares or give it away in dividends. And that's what they do. The real issue with Apple is they have a problem, and their problem is they make too much money. They have $100 billion of annual free cash flow, so it keeps flowing in. And so what do they eventually do with it? Well, they give it away, but you borrow a little bit at a time, and for Apple, that's $5 or $10 billion chunks.
Robert Schiffman on short notice there on the Apple transaction. Look to our Bloomberg Intelligence team and also to Bloomberg News for the publication of that transaction, always anticipated on Wall Street. Thank you for your listening on Commute. Particular thank you to those on Sirius XM channel 121. Greatly appreciate that. On YouTube, building every day, subscribe to Bloomberg Podcasts. Just can't say enough about that. And on YouTube Podcasts, this is Single Best Idea.